Hey everyone, Graham Stephan here. Let's talk about building wealth, no matter your starting point. You don't need a ton of cash to begin investing. With smart strategies, even small amounts can grow over time. Remember, it's a marathon, not a sprint. Stick around to learn how to make your money work for you. The first and arguably most important investment you can make is in yourself. You've heard me say it before. Knowledge is power, especially in the world of finance. The more you understand about investing, economics, and how money works, the better equipped you'll be to make smart decisions with your capital. Think of it like this. Would you rather jump into a car without knowing how to drive? Or would you take the time to learn the rules of the road, understand how the engine works, and practice your driving skills? The same principle applies to investing. Luckily, there are tons of resources available to help you level up your financial literacy. Books are a fantastic starting point. Rich Dad, Poor Dad by Robert Kiyosaki is a classic that challenges traditional views on money and wealth building. And don't forget about online courses. Platforms like Coursera, Udemy, and Skillshare offer a wealth of knowledge on investing, entrepreneurship, and personal finance, often at a fraction of the cost of traditional education. Investing in yourself goes beyond just book smarts. It's also about developing valuable skills that can boost your earning potential and open up new opportunities. Think about skills that are in high demand, like coding, digital marketing, or graphic design. These days, there are countless online resources that can teach you these skills from the comfort of your own home. Platforms like Codecademy, Google Digital Garage, and Canva offer free or affordable courses that can equip you with valuable skills to either enhance your career or start your own side hustle. Remember, the more you invest in yourself, the more valuable you become. By continuously learning, growing, and expanding your skill set, you're setting yourself up for long-term financial success. And who knows, maybe that new skill you learned will lead to a higher-paying job, a successful side business, or even the confidence to start your own company. The possibilities are endless when you invest in your own growth. Building capital to invest starts with a small savings mindset. You don't need a huge income, just consistency. Even a few dollars a day adds up. Make saving automatic with recurring transfers. Soon, saving becomes a natural part of your routine. Once you've established a consistent saving habit, it's time to think about how to make that money work harder for you. Remember, leaving your savings in a traditional savings account might not be the most effective way to grow your wealth, especially with today's inflation rates. Instead, consider exploring options that offer higher returns, like high-yield savings accounts or money market accounts. These accounts typically offer better interest rates than traditional savings accounts, helping your money grow faster. Another strategy is to explore short-term investment options like certificates of deposit, or CDs. CDs typically offer a fixed interest rate for a set period, providing a predictable return on your investment. The key is to find the right balance between risk and reward, based on your financial goals and risk tolerance. Remember, the goal is to put your savings to work for you so that your money is growing faster than inflation is eating away at it. Alright, let's talk about stocks and ETFs. Now you might be thinking, Graham, I don't have thousands lying around to throw at the stock market. And you know what? That's totally fine. You don't need a fortune to get started. Remember, we're playing the long game here. The beauty of investing in stocks and ETFs is that you can start with small amounts, even as little as $50 or $100 a month. Think of it like this. Every little bit you invest is like planting a seed. Over time, with consistent watering and nurturing, those seeds will grow into a fruitful investment portfolio. The key is to be consistent. Just like you wouldn't expect to get ripped overnight from hitting the gym once, you can't expect to get rich quick in the stock market. It takes time, discipline, and a commitment to consistently investing. Remember, Rome wasn't built in a day, and neither is a successful investment portfolio. Start small, stay consistent, and watch your money grow over time. Now, when it comes to choosing your investments, I always recommend looking for companies that pay dividends. Dividends are essentially a share of the company's profits that they pay out to their shareholders, usually on a quarterly basis. Think of it like getting paid to own a piece of a company. And the best part, you can reinvest those dividends back into buying more shares, which will then pay you even more dividends. It's like a beautiful snowball effect. Another crucial tip for maximizing your returns is to minimize your fees. That's why I always recommend going with a low-cost broker. Every dollar you save on fees is another dollar that stays invested and working hard for you. There are tons of great low-cost brokers out there these days, so do your research and find one that fits your needs. Remember, every penny counts when it comes to investing, so don't let those pesky fees eat away at your profits. Now I know picking individual stocks and managing your own portfolio can seem daunting, especially if you're new to the investing game. But don't worry, there are other options out there, like investment funds. Investment funds pool money from multiple investors and invest in a diversified portfolio of assets such as stocks, bonds, and real estate. The best part? They're managed by professional fund managers who do all the heavy lifting for you. Think of it like having a personal financial advisor but at a fraction of the cost. And because investment funds hold a variety of different assets, they offer built-in diversification, which helps to reduce your overall risk. Remember, diversification is key when it comes to investing. As the saying goes, don't put all your eggs in one basket. Investment funds make it easy to diversify your portfolio and reduce your risk without having to pick individual stocks yourself. And speaking of smart investment strategies, let's talk about the private pension system. This is a government-incentivized program designed to help you secure your financial future, and it's something I highly recommend looking into. Here's how it works. You contribute to a private pension plan, and the government sweetens the deal by adding a 30% state contribution on top of your contributions. That's right, you put in money, and the government adds to it. It's like free money. The BES is a fantastic way to boost your retirement savings and take advantage of government incentives. It's designed to encourage long-term savings with tax advantages and potential for growth. Plus, with the added bonus of the state contribution, it's a no-brainer for anyone looking to secure their financial future. Don't underestimate the power of compound growth and government incentives when it comes to building wealth. The earlier you start, the more time your money has to grow, and the BES can play a significant role in that journey. Alright, let's talk about everyone's favorite topic these days, cryptocurrencies. Crypto has taken the world by storm, and for good reason. It's decentralized, meaning it's not controlled by any government or financial institution, and it's accessible to anyone with an internet connection. One of the biggest advantages of crypto is its accessibility for small investors. You don't need a ton of money to get started. In fact, you can buy fractions of a coin, making it a more approachable investment option for those who are just starting out. However, it's important to remember that with great potential reward comes great risk. Cryptocurrencies are notoriously volatile. Their prices can fluctuate wildly, and what goes up can just as easily come down. That's why it's crucial to only invest what you can afford to lose. Don't put your rent money or your emergency fund into crypto. Only invest money that you're comfortable losing, and always be prepared for the possibility of significant price swings. Before you dive headfirst into the world of crypto, it's essential to do your research and understand the risks involved. Don't just blindly follow the hype or listen to what some random influencer is saying online. Take the time to educate yourself about different cryptocurrencies, the technology behind them, and the potential risks and rewards. There are tons of great resources available online, so do your due diligence and make informed investment decisions. Remember, knowledge is power, especially in the world of investing. The more you know about cryptocurrencies, the better equipped you'll be to navigate the market and make smart investment choices. And lastly, never underestimate the importance of risk management. Set clear investment goals, diversify your portfolio, and have an exit strategy in place. Crypto can be a wild ride, so it's essential to be prepared for anything. Now, let's talk about something that's been considered valuable for centuries: gold. You know, the shiny stuff they make Olympic medals out of? Gold has always held a certain allure, and for good reason. Throughout history, gold has been seen as a safe haven asset. When the economy takes a downturn or inflation rears its ugly head, people often flock to gold as a way to protect their wealth. Think about it, no matter how much money the government prints, the amount of gold in the world remains relatively stable. Now, I'm not saying you should go all in on gold, but having a small percentage of your portfolio in gold can act as a hedge against inflation and economic uncertainty. And the best part is, you don't need to be a millionaire to get started. With digital banks and online investment platforms, you can buy fractional shares of gold for as little as a few bucks. It's like buying a tiny sliver of that shiny gold bar, but without the hassle of storing it in your house. Next up, let's talk about foreign currencies. You know, those colorful bills you get when you travel to different countries. But foreign currencies can also be a smart way to diversify your investment portfolio. Think about it. If the value of the Turkish lira drops, having some of your money in US dollars or euros can help offset those losses. It's like having a backup plan for your money. Plus, holding foreign currencies can come in handy if you're planning to travel or study abroad. Now, I know what you're thinking. Dealing with foreign exchange can be complicated, but trust me, it's easier than you think. Many online brokers and even some traditional banks offer easy ways to buy and sell foreign currencies. Just remember, like any investment, it's important to do your research and understand the risks involved. Exchange rates can fluctuate, so it's crucial to monitor your investments and make adjustments as needed. Building wealth doesn't always mean huge investments. Thanks to the digital age, you can start a side hustle from home, lean and mean. Think about your skills and passions. What can you offer the world? Maybe you're great at crafting, designing, or writing. Platforms like Etsy, Fiverr, and Upwork connect you with customers. Start small, test the market, and reinvest your earnings. The rewards, financial and personal, can be incredible. Looking for low-cost business ideas? Try dropshipping. Sell products online without inventory, while a supplier handles shipping. Or create digital products like ebooks or online courses for almost zero overhead. Content creation on YouTube or TikTok can also lead to brand deals. Find your passion, work hard, and your business could change your life. Real estate is a classic way to build wealth, but buying property can be intimidating. That's where REITs, real estate investment trusts, come in. REITs let you invest in income-producing properties like apartments and malls with much less money. They pay high dividends, offering steady passive income. And since they're traded like stocks, REITs are easy to buy and sell. REITs aren't the only way to invest in real estate without buying property outright. Crowdfunding platforms let you invest smaller amounts in specific projects, or consider partnerships to pool resources and share rewards. Just remember, real estate has risks, so always do your research. With REITs, crowdfunding, and partnerships, you can start small and grow over time. Building wealth is a marathon, not a sprint. Stay disciplined, avoid get-rich-quick schemes, and diversify your investments. Make your money work for you, keep learning, and adapt as the world changes. The best time to start was yesterday. The second best is today. Go make it happen.